Figma's $45 billion IPO success. Was Lina Khan right to block Adobe's acquisition? Lina Khan, the former chair of the Federal Trade Commission, FTC, is unexpectedly celebrating the successful initial public offering, IPO, of Figma, a design software company. In a post shared on X, formerly Twitter, on Friday afternoon, Khan highlighted an article discussing Figma's remarkable debut on the stock market, where its shares surged over 200% on the first day of trading. She emphasized that this IPO serves as a powerful reminder of the immense value that can be created when startups are allowed to flourish as independent entities, rather than being absorbed by larger corporations. Khan's remarks reference a significant $20 billion acquisition deal that Adobe attempted to finalize for Figma, which ultimately fell apart in 2023. Adobe had cited the absence of a clear path to regulatory approval from both the European Commission and the UK Competition and Markets Authority as reasons for the deal's collapse. Additionally, there were concerns raised in the United States regarding whether the acquisition would hinder Figma's ability to compete effectively against Adobe. At the time of the proposed acquisition, Khan was leading the FTC and was known for her aggressive stance against big tech, particularly regarding their acquisition of startups. This scrutiny was so intense that some companies began to adopt a strategy known as reverse acqui-hires, where they would hire key personnel from startups and license their technology instead of pursuing outright acquisitions. This trend appears to have continued even after Khan's departure from the FTC. Despite facing significant backlash from various sectors of the tech industry for her rigorous approach, Khan defended her position by pointing out that only a small fraction of deals were subjected to further examination. She argued that founders would ultimately benefit from a competitive landscape with multiple potential buyers, rather than being limited to just one or two options. Although Khan resigned at the beginning of the second Trump administration, having been appointed by President Joe Biden, her recent comments regarding Figma's IPO suggest that she views this event as a validation of her regulatory approach. She described the IPO as a victory not just for the company, but also for its employees, investors, innovation, and the general public. However, critics of Khan are likely to interpret Figma's success as occurring in spite of regulatory scrutiny, rather than as a direct result of it. For instance, Dan Ives, an analyst at Wedbush Securities, remarked to Business Insider that while Figma stock, Fig, surges after IPO. What you need to know. Figma's wild ride, a controversial IPO story. Figma Inc.'s stock, FIG, had a roller coaster second day on the market, with shares experiencing a dramatic surge and then a subsequent pullback. This follows an already impressive first day, where the stock more than tripled in value from its IPO price. But here's where it gets controversial. Figma's massive first-day pop is a rare phenomenon, especially for a company of its size. Data shows it's the largest first-day gain in decades for a U.S.-traded company raising over $1 billion. So, what does this mean for investors and the market? The San Francisco-based company's stock closed at $122 per share on Friday, a modest 5.6% increase from the previous day. This suggests that while the initial hype drove prices up, there may be some caution and consolidation setting in. And this is the part most people miss. Volatility like this often leads to questions about valuation and market sentiment. Is Figma's performance a sign of investor confidence in its long-term prospects, or a short-term frenzy that could correct soon? It's a fascinating case study in IPO dynamics. What do you think? Is Figma's surge a sustainable trend, or a temporary bubble? Share your thoughts in the comments, and let's discuss.